Tom, it's really good to see you. I have an important question. Should I pay off my mortgage before I retire? A lot of us want to go into retirement debt free, but it's not just a financial, but also an emotional decision. But before you pay off the debt, we're going to walk through a few considerations. And the first one, Tommy, is your mortgage rate. But as you were explaining to me offline, this is just one small piece of a very big puzzle.
Correct. Yeah, the mortgage rate, I don't think is as important as the volume of interest that someone ends up paying over the life of their mortgage.
Right.
So, 3%, 5%, 7%, still a lot cheaper than when our parents got their first mortgages at 12, 15, 17%. So these are kind of normal rates, to be honest with you. So it's just a small piece of the puzzle, but everybody has to be comfortable. You said from the outset, the emotional part of it. I get the emotional part. People want to go to bed, sleep at night, and know that their house is paid off in retirement. But that's not my job. My job is to explain to you the efficiency of dollars, the efficiencies of your monies. And if you walk through that, then typically the answer is no. It's not efficient to pay off your mortgage in retirement, especially if you can afford it with your retirement income. But that's my job. My job is I accept the emotional part of it, but I just want everybody to understand the math side of it as
Right.
well.
Right. And sometimes that math can lead you to change how you feel
Sure,
about paying off that
absolutely.
mortgage when you see.
If you see how much money you're
Yeah.
saving or how much more money you have control of, then yeah, that'll change your perspective pretty quickly.
That is absolutely eye-opening. You're right. All right. So next, of course, let's talk taxes because that is something that is always important to you. What are the tax consequences of either paying off your mortgage or even using money from your retirement accounts to pay off your mortgage?
Well, I'll address the tax issue first. Depending on how long you're into your mortgage, right? The early years, for first 10, 15 years, you're getting big tax deductions on your interest. So again, if you look at your cost of money, and then you take in the consideration of the tax benefits of having a mortgage, you might be you're going to have a discounted value of what you're paying for money over time. The retirement question, I don't think ever recommend anybody spending retirement money, qualified money that they're going to get taxed on, to get rid of a mortgage where they're going to lose a tax deduction. To me, absolutely does not make any sense whatsoever.
Right. Well, you were saying essentially you can always get a loan for
Right.
anything almost except for retirement.
Right. Nobody, the bank's not going to give you a loan to live off of. They're going to give you a
Right.
loan, for an asset.
I wish that it did work that way. Okay, next,
Exactly.
so as interest rates climb, that will make paying down certain debt more expensive. So how do we prioritize them paying down that debt?
Well, you always go after the least efficient debt first. So the high interest rate credit cards, the boat loans, the car loans, those are the ones that you always want to go after first. Again, emotionally, some people have more than one credit card, say. One might be a $2,000 credit, and then another one might be 20,000. So if you want to get the emotional wins, pay the least on the bigger debt first, and then get rid of that $2,000 one, and then emotionally you have that win. Oh, now I'm only down to one card, and
Hmm.
then you just transfer those payments over to the higher debt one, and get that one paid down faster.
Hmm.
From there, again, the things that are of no value to you monetarily, cars, boats, things like that, start getting rid of those as well.
Hmm. Okay, so let's say that we've paid down that high interest debt. Then do you focus on your mortgage or do you prioritize other savings?
Well, then the question is, if I pay down my mortgage faster, does that increase the value of my home? And the
No.
answer is no, right? So savings, to me, that's the answer. Paying down your mortgage faster doesn't give you more equity. I mean, you're building more equity, but you don't have any control of that. So if we have a financial crisis, a bank could cut your equity availability in half or get rid of it altogether, like Wells Fargo did a bunch of years ago. So if I have a Wells Fargo as my bank, I can't get a home equity line. So savings, right? So put money aside, put it somewhere so that you have liquidity and control. And then, hey, if you build up enough in that account, you could always pay your mortgage off if you want to. And isn't that the same thing as paying off your, let's say, paying extra into your mortgage? But what if there's an emergency? The boiler in your house goes, the transmission in your car goes, you need a new roof. You may not be able to access equity in your home, whereas if you have your control of your own assets, then you have a place to go.
You also mentioned the philosophy of, making a 15-year loan as opposed to a 30, and then saying, all right, well, after those 15 years, I'll put it into savings. But then you miss that wonder of compounding interest.
Right, you're going to miss 15 years of compounding interest and control. Again, you're losing control of your money by giving it to the bank. You're way better off emotionally and financially keeping control of your own money, so that then you can decide when you want to pay things off.
Okay. Well, again, Tom, I come to you for the truth bombs. Thank you again for delivering. That being said, of course, if somebody wants to crunch the numbers with you to make sense of whether it makes sense for them to pay off their mortgage or not, what's the best way to reach you?
Email is tjoconnell@internationalfinancial.com. Phone number is 973-394-0623. And I'll throw a plug out to Erin Kennedy for her podcast with her friend Megan. So let's make sure that we get that watch if you want to see the inside truth of the newscaster life.
Yes.
And also our podcast, Retire Happy from Coast to Coast, with myself and John Imarino. And you can go to retirehappy.com to get any information on that as well.
Yeah, you guys got your new website up. It looks awesome too. Retirehappy.com. Perfect. All right, Tom, thank you so much.
My pleasure.